Welcome to Short View Trading, it's your morning market hit for Tuesday, 29th of August. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And today in this video, what we want to dig into is what drives markets on a 1 to 2 week basis. If you want to invest in S&P index futures or NASDAQ futures, FTSE futures, DAX futures on a 1 to 2 week time frame, what's the best way to go about it? What should you be looking at? What should you be thinking about? And what should you be digging into in terms of market price action? And indeed, in terms of that price action, it's all been about the Magnificent Seven, the 7 mega cap tech stocks in the States, which have dominated US and indeed global stock market performance over the first 6 or 7 months of this year. Indeed, up until the halfway point, June the 30th, as you can see in the chart in front of you now, many of these stocks were up 50, 60, 70, 100, even more in terms of percentage terms. Nvidia up almost 200% by the middle of the year, and at the bottom end of the range, Amazon and so on up 30 odd percent. So there's been a lot of very strong stock market performance from the Magnificent Seven on the back of the extreme bearishness towards these stocks at the back end of this last year, coupled with the fact there's been enthusiasm about AI, and these stocks are absolutely the AI story encapsulated. But in more recent weeks, they've started stalling. And we've seen that over the course of August. It began in mid-July for some of these stocks. And over those recent weeks, we've seen a change in the price action and the price performance of these shares. Take Apple, for example, a very key example, darling of the stock market, struggled on its earnings, gapped down on earnings, and then subsequently moved below its 50-day moving average. And now looks like it's struggling to get above that level. That's now key resistance, having been key support for most of this year. It's now flipped the other way, and the price action looks poor. But it's not just Apple. Interestingly, Nvidia last week, one of the great performers this year, as we mentioned, really struggling on the back of its earnings last week, even though the earnings were terrific and the guidance was strong. Despite that, the stock stalled out, rallied hard into those earnings for a couple of days and then stalled out on Friday and yesterday. So it's not just Apple, it's also Nvidia. If you look at Microsoft and Tesla, both of those trading below their 50-day moving averages. And indeed, there aren't many stocks left above that level. Nvidia's just about above it. Amazon, as you can see in this chart now, is sitting on the 50-day moving average. And it's really only Alphabet that's meaningfully above that key moving average level, that key support level. So in terms of the Magnificent Seven, the price action's changed dramatically in the last few weeks. And it leads to the question of where do we go from here? Because these stocks have been the leadership of the stock market in 2023. And it looks like they're not going to be leadership anymore. It looks as though the leadership is switching in this pullback that we've had over recent weeks. We've had a bit of a wave 2 relief rally the last 10 days, but most of August has been a pullback in the stock market as leadership seems to be shifting away from tech and either towards cyclicals or defensives. That, of course, leaves a big question because cyclicals rarely take up leadership when the Fed is raising interest rates, particularly when they've been raising them aggressively. And that's, of course, where we're at now. And that only leaves the defensives. If you think about the market in terms of those big 3 areas, the long duration growth stocks, or the cyclicals or the defensives, at every stage in the market, one of those 3 areas tends to lead. And if it's the defensives almost always lead when the stock market's going down. So it's not good news. So the switch in leadership is critical. The price action in the tech stocks and the mega cap tech stocks, the Magnificent Seven, is critical, particularly if it continues to confirm that they're not going to lead the market anymore. And if the price action remains soggy and weak and Apple, for example, struggles to move higher. So these are critical things to watch, critical stocks to watch, and critical areas of the market to watch. So in that respect, the next few weeks will be key. And if you want to keep an eye on how we think about these markets, day-to-day update on our views on these markets and how to trade them on a 1 to 2 week basis, whether to be long or short equity index futures, what entry levels, what index to go short of, updates on our models, all that sort of stuff each and every day, then please take a free trial to the Daily Rag, also known as the Rag Trader. Simply click on the link below in the YouTube video and we'll sign you up for 30 days free trial, no credit card details required, simply your name and email address.